Vikas, first up, as far as the market setup is concerned, we're not, breaking out of that range at all. Whether it's earnings or whether it's budget, we are not seeing that big reaction. And of course, the entire Adani saga continues to weigh on the market. Do you expect us to break out of the range anytime soon? Because you had quite a bullish target for the year 2023 as a whole.
So I think we are in a consolidation phase. If you read our beginning of the year note, we said this year it's mix of headwinds and tailwinds, and there are clear headwinds and there are clear tailwinds, and the markets are in a fair value zone. So whenever this kind of setup is there, it takes time to break out of the range. So I personally think that this year, maybe in first half, first 6 7 months, it will kind of be in this range, and the breakout probably would happen in second half this range, the second half of this year. The simple reason, I think, this first half this year you have some uncertainty whether it is to do with the Fed rate, issue, or to do with the and all the worries related to inflation, interest rates. In my opinion, will settle down. Some bit of a slowdown in the demand is also visible in some segments. That will also settle down. So I think market will gain probably more direction in the second half than the first half. But this year is going to be a mixed year from a headwind and tailwind perspective. And directionally, of course, we remain positive. At a lower level, you will find a lot of interest coming in, as we saw in the recent falls as well. So structurally, there's no challenge to the India story. Of course, in a structural bull market, always there are periods of consolidation and periods of correction, and this is what we are passing through.
Right. Vikas, hi, morning. It's clearly the Adani saga, right, which has occupied most people's names and their social media feeds as well, like you also highlighted in your latest note. But just wanted to understand, that aside, whether or not you think the panic is overdone, and whether the fears of a contagion impact, as we have seen play out on the past couple of trading sessions, whether that needs to sort of get arrested now.
So, I mean, again, we have said that clearly that we don't think there's any contagion effect happening, in systemic level, whether it is banking system or fortunately, I think, there was not a lot of exposure, large exposure of the investors, into the group's stock, especially even in the mutual funds and institutional category. So to that extent, I think the loss as the markets have fallen is also very limited from a systemic level perspective. I'm sure, there are investors who have lost money as well. But so at the systemic level, I don't think anything is alarming. My sense is that we are more or less done from a contagion or whatever the impact of this, and there will be a lot of. I'm sure the group is taking a lot of initiatives to gain confidence of investors back, and I think in few months' time, in my opinion, this will be behind and will be settled. Of course, whether to look at that stock, good stock, that's a different issue. But I'm saying I don't see a major contagion impact on the markets at this point in time.
Yes, waiting for the dust to settle on that front. Vikas, hi, morning. Let's also understand your view on, the overall manufacturing theme, because that was clearly one of the focal points in the budget. Basis that, given the fact that maybe it was a slight disappointment when it came to the defense outlay, what's your outlook in terms of new opportunities that you're identifying within this space?
So it's a decadal shift. It's a very, very long-term opportunity. Whenever these kind of shifts happen, in short term, we look for short-term sort of incentive reasons to buy, but in long term they play out really well. I'll take you back to IT cycle. When the IT cycle structural things started falling in place in mid 90s, it went all the way for next 5 6 years and also continues to remain till now, right? So India is a very large country with its own consumption of the manufactured goods, which that so far we've been mostly importing. And now government is making sure that we not only remove our import substitution dependency, also be export competitive. And both things are working very well. Of course, in manufacturing, long time to play out because by the time you build ecosystem, by the time you build your manufacturing plants, it takes time. So if I were to take a 5 10 year view, I have no doubt that many multi-bagger opportunities will come out in this segment. What that means for next 2 or 3 quarters, nobody knows, and probably that may not be even meaningful. So we see this is a very, very structurally long-term opportunities, and budget and many more such events are only furthering that cause. I mean, government is taking so many initiatives So there are two things to support this theme. One is the government initiative, and secondly, the natural tendency of demand from China plus one perspective, Europe one plus perspective, and also improved India's cost competitiveness vis-a-vis any other location. So these three, four factors which have come together to contribute to this. It's not only government's initiative. Of course, government initiative has added a lot. So this confluence of three, four factors is making this attractive opportunity very attractive. Even if one of them were to reduce, let's say government focus were to go down, this will still stay, is our belief. So we are very, very positive on this across major segments out of this. And we think that this will play out in a big way over the next 5 to 10 years.
Sure. That aside, Vikas, I was also skimming through your note, and when one talks about what really should an investor be doing from here onwards, you clearly continue to be very, very bullish on this, prospects of both banking as well as automobiles. Just help our viewers understand, because these are large sector pools. Where within banks and autos do you find comfort to put fresh money at work?
So again, I think banking, we banking cycle always plays out in four ways. One, that you have a credit growth, then NPS cycle comes, NPS cycle, and then provisioning cycle happens, capitalization happens, and the credit growth comes back, right? So we just got over with the about a year ago about from the NPS cycle capitalization event, and now credit growth is coming. So typically, I would say that at least next 2 3 years, credit growth should remain solid and robust, both on the corporate side as well as on the retail side. And so we are in that phase. Of course, I would say we are in the middle of the cycle. We are not in the early cycle in banking, but we are in the middle of the cycle, and it has still at least, in my opinion, 3 4 years of from cycle perspective play inside. And so in that sense, banks which are well capitalized, good technology platform, good customer base. We own ICICI Bank in our portfolio. We have Bank of Baroda in our portfolio from PSU perspective. We own Federal Bank. So we have a reasonably large exposure to credit space where we think the credit is likely to grow very well. So and between NBFC and credit banks, we have taken large exposure, and it's likely to play out according to us from a 18 to 20% kind of return over next 3 years looks kind of possible, and they are not expensive either. So they are in a fair value range with a good earning growth ahead of us. Similarly, I think on the automobiles, if you see, and we last 4 5 years, we have had a very poor demand environment, and now as environment is settling down, there were serious issues, IL&FS crisis, COVID, and chip shortage. Now I think all of them are behind, and I think companies are looking to grow. Credit is being made available, so we will see reasonably good amount of growth from our automobile manufacturers. So we own Maruti, we own Eicher Motors in our portfolio. We own Mahindra and Mahindra. So I think these are some of the places we think that will deliver well over the next couple of years. I think 18 20% return is quite possible. Anything above that, I think we'll have to be lucky and we'll have to see the cycle. But I think this kind of gain looks like that within the achievable range.
Because you also have a large exposure when it comes to the entire technology sector. And apart from the large cap names, the likes of Infosys, HCL Tech, LTI, Mindtree, you also have, exposure in your structural shift fund to the specific names, the likes of Tejas Networks, Newgen Software Technologies, etc. Could you talk to us about where you're seeing value when it comes to the mid-cap and small-cap category in the IT sector? And are you disappointed with Tejas Networks continues to report losses despite a good top-line growth?
I think, see, we have been very bullish on the technology sector per se. There are two types of this technology sector. One is the IT services, which I, where the names like HCL Tech and LTI play a role, and they have been doing very well. They have been growing in the range of 13 to 15% with a good dividend yield, and we think that that's quite possible. We continue to believe that there's a good tailwind in the entire IT sector that's likely to continue, and I think we're more playing. This is the IT sector right now is my more combination of growth and defensive, and especially when in an uncertain environment, it also offers in some sort of currency hedge. So that's our thesis there, and we continue to remain positive on that. Companies like Tejas Networks and all are very different. They are more into manufacturing and technologies, combination of that. They're into telecom equipment space, and this company is, a very, very high promising company from a capability perspective. They have a huge amount of capability on the 4G and 5G side of equipment, and with Tata coming in, their initial problem of capital and credibility despite having capability, was a question. But with Tata coming in, both credibility and capital availability has got sorted out. So this is a really, in my opinion, 5-10 year trend. It has the potential to become Huawei or Nokia of India in that sense. Whether it will become or not, we will have to only see in time. So we in this kind of play, we are not really looking from a short-term perspective. I mean, single order from BSNL could be 20-30,000 crores, and which will change the game of the company. So these are the companies with a very different, investment approach. And you won't be able to see value from a traditional valuation perspective. So this is slightly different call we have taken, and we think that it sits right between technology and manufacturing.
Right. Vikas, so great to have you on the show today. Thanks as always for joining in with your thoughts.
Thank you, pleasure. Thank you for having me.
Okay, that's the word.